You earn 20 lakhs in freelancing. Amazing. That's incredible. What they say is correct. The sky is the limit in freelancing. But now that all congratulations are done, what about taxes? This is precisely what we are going to talk about in this video. Freelancing is the current keyword in the work industry. Almost every second person that you might talk to is talking about freelancing, how they are earning so much through freelancing, how they are planning to start their freelancing business. Every second video suggestion on YouTube might be boasting about how people are earning lakhs of revenues in freelancing. Well, they are not wrong about it. There are many pros to doing freelancing. You have the flexibility to do any kind of work that you are skilled at from anywhere, at any time, onboard as many clients as that you want. So in a gist, you have the freedom in freelancing. Of course, it sounds all dreamy, but when it comes to freelancing, most of the people think that it is only limited to talking to the client, onboarding the client, giving your services, and then getting the payment. It's not that simple. It's a whole business and in any business, there are finances involved. And when there are finances, there are taxes. So this is precisely what we are going to talk about in this video. This new area of freelancing can be a bit confusing from a tax perspective, but I, being a law student, having spent 5 years in law and being a freelancer consultant myself, I am going to help you understand what are the broad tax laws around freelancing in Indian law. This is going to be your A to Z guide about freelancing taxes, managing payments, TDS, TCS, whether you should file for a GST or not, advanced tax, etc. So I'm going to clear some of the most common doubts that might come to your head when it comes to freelancing income. Now let's start with the first one. What is freelancing income? Well, as per the law, in simplified language, any income that you get by using your skills, whether it is physical or intellectual, when you are not tied to a particular company, that income will be considered as freelancing income. Now, this can be any kind of job, from graphic designing to interior designing to consulting services, etc. Now, this income is not related to age or profession. You can have freelancing income even when you are a salaried employed if you're involved in some other side gigs. Now, this income that you're getting apart from your salary income will be considered under the head of profits and gains from business and profession. This is a separate head under the income tax law. The gross, that is the total freelancing income that you might be making, can be calculated by taking the sum of all receipts that you received during the course of your profession or providing your services. Now, these receipts can be digital or physical, but all the receipts calculated together will give you the total freelancing income. A quick and easy way to calculate that, if you are someone who provides services online and you receive payments through digital transactions, then your bank passbook or your bank statement can help you calculate your total income. Now, on this income, are you required to pay tax? Well, yes, of course. Now, there is a simple and clear line that you should keep in mind if you have to know when you have to pay the tax. If you are an Indian resident, then any income that you make, whether it is outside India or within India, your income will be taxed as per the Indian laws. Now, under the Indian laws, you are taxed according to the income that you receive. It is the responsibility of the taxpayer to file their taxes correctly and on time. But what are these income tax slabs and what is the range? Well, as per the current scenario, there are two tax regimes. One is the old tax regime, which has these tax slabs according to this kind of income, and the new tax regime in which there are two variations. The latest one, which has now become the default tax regime from the financial year 2023 to 24, these will be the broader tax slabs. You can pause the video to understand the difference. Now comes the important question. How to calculate the tax and how to pay it? You have to file an ITR and pay the tax yourself. That is the self-assessment tax as per the Indian law. And there are multiple steps involved when it comes to filing taxes for freelancers. Let's go through them. First, start with calculating your gross income in a financial year. Now, a financial year starts from 1st April of a particular year to 31st March of the next year. In this calculation, when you take the sum of all gross receipts that you received during the year, exclude any kind of loans or any kind of debts that you might have taken. Second, now the tax applies to only profits for the freelancer. So you must deduct all the expenses that you might have incurred during your service. Now, what kind of expenses are we talking about here? Well, these are business expenses ranging from rent being paid for your office space, to your telephone bills, to your internet cable connections, to any kind of software purchases that you might have made, or even hiring and outsourcing of work that you might be doing. But how to know which kind of expense can be deducted? Well, these 5 conditions should be satisfied. The expense should be directly related to the course of work. It should be be done in a tax year. It should be wholly and solely done for the purpose of work. It should not be a capital expenditure or a personal expenditure of the freelancer, and it is not done for any purpose which is prohibited by the law. So for example, if you're a consultant and you hire an outside person to check on your emails, then that will be outsourcing of work. Whatever salary that you might be paying to that person, that can be considered as expense. Similarly, if you're a video editor, then if you're subletting your work to someone else, then the amount that you're paying to that person can be considered as an expense. All expenses that are related to your primary work, those can be claimed. Now coming back to the calculation of taxes, the next step will be to claim the depreciation on capital assets or capital expenditure that you might make. Now this depreciation can be claimed on vehicles, furniture, fixtures, laptops, etc. So for example, for your consulting business, you might want to buy a laptop. Now that laptop costs 1 lakh. That will be a capital purchase. Now the depreciation on a laptop, which is 20% over the course of 5 years, that depreciation on that laptop can be claimed each year. So till here, your total income is calculated. From that, the expenses and depreciation is claimed. And now you have arrived to your net profit, which will be added to your other heads of income. Then you will have to calculate the extra income that you made from your other sources. Now this can be your income from your salaries, income from your property, income from trading shares. All of these amounts along with the net profit that you came up to, that has to be added together to arrive at a final figure. That final figure will help us determine which slab we fall into and what tax rate will be applicable to us. But before we go on to determining the tax slab, you can also claim deductions under Section 80 of the Income Tax Act. Example, under Section 80C, you can claim deductions up to rupees 1.5 lakhs and save taxes on that amount. The next step will be to claim TDS. Now, a lot of people get apprehensive about TDS, that clients, before making the payments, they are deducting some sort of TDS. Now, this is just a way of collecting tax by the government at the source of the payment. This is your tax only that you eventually have to pay. This is not some extra tax or extra money that the government is taking or the client is getting. The person who's making the payment to you, the government has entrusted that person with the responsibility to deduct the tax from the income gainer and deposit it to the government. This is just a part of your income tax. This is not your final tax liability, but whatever amount is being deposited or being deducted at this point, that will be counted as part of your final tax liability. So for example, in simplified words, if your final tax liability comes out to be rupees 100, but that has already been deposited with the government as part of the TDS, then while filing the ITR, you will not have to pay any kind of tax. Now, the next step that comes is advance tax. If your total payable tax in a financial year comes up to be more than rupees 10,000, then you will have to pay tax every quarter. This is known as advance tax. But how to know if you're liable to pay advance tax? Well, for that, you have to make some rough estimates of your income, of your expenses, of the depreciation, of the TDS, then calculate your final tax liability. And if that tax liability, if it surpasses rupees 10,000, then you'll be required to pay the advance tax at every quarter. This advance tax can be paid online or by going to the bank and filing a paper challan before the prescribed date for every quarter. If you fail to do so, or if you make the payment late, then interest will become applicable on this tax. Now, all of this might seem a bit complicated and you might be thinking that, oh my God, I have to maintain a book of records, I'll have to file these many taxes, I'll have to do so much headache. Well, good news for you. The Indian government, for small taxpayers whose income is not that much high, they have a scheme to simplify the tax process. Section 44 ADA talks about the presumptive tax scheme for professionals. Under this scheme, whatever your freelancing or professional income has been in a particular year, only 50% of that income is considered to be as profits. The rest 50% is presumed to be expenses. Now, since for freelancing, tax is only applicable on profits, that means 50% of your entire income, which is considered to be as profits, will be taxable. Let's understand this from an example. For example, as a consultant, if I get an income of rupees 20 lakhs in a particular financial year, if I opt for this scheme, I can, without any maintenance of book of records or without any kind of hassles, I can declare 50%, that is only 10 lakhs of the 20 lakhs total income as my profits. Tax will be applicable on this 10 lakhs. Now, after opting for this scheme also, I can further claim more deductions, thereby reducing my taxable income more. Now, the catch here is that the cap for opting for this scheme is rupees 50 lakhs for the previous financial year. For financial year 2023 to 24 onwards, the cap has been raised to 75 lakhs. So this is a big relief to small taxpayers whose income is not that high. They don't have to take the headache of maintaining each and every transaction, jotting down every kind of expense. They can simply opt for this scheme. However, some conditions are to be satisfied here also. For instance, if your expenses are more than 50%, then you'll have to maintain a book of records. And if your income goes above the prescribed limit of either 50 lakhs or 75 lakhs, then again you'll have to maintain a book of accounts. After doing all of this, the last step would be to file the ITR. For freelancers, you have to file ITR 4. An important question here comes is about GST registration. Whether freelancers are required to register for GST and when is it applicable? Now the law here is simple. If you're serving Indian clients and if your total turnover is above rupees 20 lakhs, for special states it's 10 lakhs. But generally, if it's above 20 lakhs, then you'll have to compulsory register for GST and pay the GST. Now, if you register for GST, there are more compliances involved. You might have to do more filing. For that, I will make a separate video. Do let me know in the comments. But for the purpose of this video, if you are someone who's planning to register for GST, then you must keep these important points in mind. Now, before we end this video, a frequent question that a lot of my clients ask me is that should I register for a business, a sole proprietorship? Should I open a company or should I continue like this? Well, it depends on your case, honestly. It varies from case to case because as a freelancer, you are a one-man army. So by default, if you even want to register as a business, then you will be a sole proprietorship unless you're working with someone else in partnership. So when you're starting out, when you're getting just the gist of the business and you're understanding how this world works, then it's advisable that you get the essence while working as an individual. However, if you want to scale it up or if you want to take in more revenue or if you want to do any kind of scaling, then it is advisable that you register as a sole proprietorship later on. I'll also make a separate video on what is better, whether you should register as a sole proprietor or if continuing as an individual taxpayer is better. So do let me know in the comments. I hope this video made things clearer for you. If there are any doubts, please ask them in the comments below. I will surely try to answer as many queries as possible. If there are any other videos that you would like me to make on any particular tax related subject or law related subject or anything that you would want me to talk about, please comment that also. I will definitely try to make a video on that. Thanks for watching. I'll see you on my next video.